So if you struggle to increase those risk rewards in your trading, then I'm going to solve that problem for you today by sharing with you a strategy how to increase your risk to reward and, more importantly, increase those profits. Let's head over to the charts and go through exactly how you can use this today. So I'm on the Euro USD pair and we're on a weekly time frame currently. Now, what I'm going to go through today is share with you a simple way to increase those risk rewards in your trading, and it's using multiple time frame analysis, and it's also using a confirmation entry or the change of character. So the way we're going to approach this is we're going to look at a weekly time frame, and I'm going to be looking for an entry on a 4-hour time frame. Now, if you do want to understand this in much more depth, then there is the free trading strategy class that you can go through with the use of the 2-time approach, and it will show you how to trade off a 5-minute entry time frame. Now, this is going to show you how to use it on a 4-hour time frame, but that strategy class will go in much more detail for you. So when we see the market here coming to downside, we see that reversal. First thing we need to look at is where we're trending in the market. Now, using a reversal area, we can witness the market breaks up here to the upside, which shows me a reversal. Now, if we go to a line chart, we can actually identify this much quicker. We can see this is a previous swing high. We break to the upside. That shows me the reversal. And we also break out of this swing high here, or you could even use this high. It's up to you if you're using the wicks in the candles. This area here I just showed you would basically be that line chart. Go to line chart, there's the line chart breakout. Whichever way you feel comfortable of using. Now, what we're going to do, we're going to see that we have this break to the upside here, a pullback here in the market, and this is going to show me a break here of the line chart. Again, popping to the line chart, there's your breakout. All this will become clear in a moment why we need to do this. Now, again, you can just use this swing high. We don't actually break out to the upside there with a close until this candlestick, but we do break out with a wick. Now, it's a bullish close candle, which actually confirms to me a breakout still. Now, the important bit, we can identify we're breaking high, making higher highs, higher lows in the market. What that then leaves behind for me is going to be an area of demand. Now, there's plenty of videos in this channel to help you understand how I use supply and demand. Again, if you want to go through that free trading strategy class, that will show you exactly how I do the areas of demand and supply as well. This is an area of demand that I can draw out where we break this area of structure. Actually, let me just use this arrow. This break of structure here to the upside is an area that I like to see the market breaking up. Out of that area on the line chart shows me the market is bullish. Hey traders, we'll get back to the video in just a moment, but I want to give you a gift for hanging out with me today. I want to give you a free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything that you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate you more profits and the steps to building a profitable strategy for yourself. You don't have to spend a lot of time on this. It's about doing the right things in the right order, and it's free as my gift to you. So just go to norfolkfxtrader.system.io free strategy class sign up, or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video. So we have a solid area of demand. We're looking for an entry. Now, the normal way we look for a trade out of an area of demand and supply is using a set and forget trading style. Now, a set and forget entry, we're just looking for a simple way to enter the market without having to follow the market. So we don't have to sit there looking at the charts. And the way we do that, we just set our entry, our stop, the low of the zone, our entry, the open that zone, and we just look to target the previous swing high. Now you can see on this example, this trade worked out and we would have made just over a 2-to-1 risk to reward. And it's simple as that when we're looking to take a trade. When you understand the use of a break of structure, supply and demand zones, it's easy to find those trades. Look, you don't need anything else to trade with. Once you understand this type of trading and this approach, forget about all the old styles of trading. Forget about the new styles you're seeing popping up every day. Supply and demand has been around for a long time, and it works. And it works over and over again. Now I'm going to show you how you can actually increase those risk to rewards using a simple technique of multiple time frame analysis. Now, if you don't use multiple time frames when you're doing your trading, you are missing the mark. You are losing out here. So this is how you can increase those profits in your trading. So the way we do this, we would actually look at this market. Let's actually remove this again. Remember, that was just over 2-to-1 risk to reward. When we see the market pulling back into this area of demand, this is when we will go down to the lower time frame. Now this time we go down to a 4-hour time frame. And what we're looking for is the same approach. When the market enters into our area of demand, we're looking for our reversal out. Now our reversal is here to the upside. Now if we just go to the line chart, there's our push down. In fact, there's even an earlier entry which we'll go through in a moment. We have a drop down on this swing. We go back to price. You can see a nice drop down. We do have a pullback here. Without using a line chart, you would not see that. And all you would see there really is this swing high is broken to the upside, which is valid, but this is a swing high ready on a push down and a reversal. If you're using just the charts we see here, this will be your area of demand. You would draw. The market comes in and we rally away. Now, again, if you went to a line chart, you could use this as your breaker structure. There's your breakout, and you just use the same zone. So there's no difference there. Sometimes you can find it'll give you into a better entry, but this is just showing you right now, this is a simple breaker structure out of this area of a higher time frame zone. We draw an area of demand, the market comes back in, and this is where we're going to look to set our entry. Our stop loss at the low of the zone, just below, and our profit target again is going to be at the swing high. So we mark it out, move the chart across, and you can see that this trade has now gone from a 2-to-1 or just over a 2-to-1 risk to reward to over an 8-to-1, nearly 9-to-1 risk to reward. And that is the simple process of applying multiple time frames in your trading and allowing you to increase those risk to rewards in your trade. Again, like I said, if you're not using this type of trading, you're missing the mark. And this is how you're losing and leaving profits on the table. It's a simple technique, a very simple way to look at using supply and demand zones in the market. But if you want to find out more on that trading strategy class, then check it out right now and sign up today.